Good morning this Wednesday, the 9th of August. I'm Grady Wool for Market Analyst with Bell Direct. Wall Street reversed Monday's rally to trade lower on Tuesday after credit rating agency Moody's downgraded the credit rating on several US banks, including M&T Bank and Pinnacle Financial, citing deposit risk as the reason for the downgrades. Moody's also placed Bank of New York Mellon and State Street on review for a possible downgrade. This caused investor fears of a further banking crisis to resurface, thus sparking the sell-off on Tuesday. The Dow Jones fell 0.45% on Tuesday, while the S&P 500 lost 0.42%, and that tech-heavy Nasdaq declined 0.79%. And in the European region, markets closed lower on Tuesday as investors await the release of significant inflation data out later this week, alongside reactions to the shock banking tax announcement out of Italy, in the form of a 40% windfall tax on banking profits, which naturally dragged the banking sector lower on Tuesday. While banks led the losses in the region on Tuesday, healthcare stocks bucked the trend to add 3.2%. The Stoxx 600 ended the day down 0.2%. Germany's DAX fell 1.1%. The French CAC shed 0.69%, and in the UK, the FTSE 100 fell 0.36%. The local market rose just 0.03% on Tuesday, as a sell-off in consumer staple stocks was slightly offset by strong gains in the healthcare sector, which is a sector that has been beaten down this year. We are preparing for the ramp-up of earnings season this week, which investors have already been particularly responsive to, with companies that have reported both good and bad results experiencing double-digit share price movements on the day of the results being released. The US reporting season has proven to be stronger than expected, so we could see a similar outcome here in Australia. James Hardie Industries released first quarter results yesterday that sent the company's share price soaring 15%. The leading global supplier of fibre cement building products reported record global adjusted EBITDA of $279.1 million, with an adjusted EBITDA margin of 29.2%, net income up 13%, and operating cash flow increased 64%. James Hardie also provided outlook, which is a big tick for investors, but only for the second quarter of FY24, with the company expecting adjusted net income between $170 to $190 million. It expects its North American business, which is its largest market, to produce volumes to be in the range of 740 to 770 million, and capex of $550 million US. While the results were a decline on the prior corresponding period, they can be attributed to the currently weaker housing market and lower demand driving lower margins. Now, on the data front yesterday, Westpac consumer confidence data for August fell 0.4% month over month to 81 points in August, down from a 2.7% gain in July, as consumers remain concerned about the high cost of living crisis in Australia. Now, business confidence for July came in a vastly different reading, though, from the consumer reading, with business confidence rising 2 points for July from a flat reading in June, indicating business sentiment is on the rise. On the reporting season calendar today, we may see some market movements this afternoon as investors respond to the release of the Commonwealth Bank of Australia's results out today. On the commodities front this morning, oil is trading 1.05% higher at $82.80 a barrel. Gold is down 0.53% at $1,926 an ounce, and iron ore is down 2.35% at $104 a tonne, amid declining demand and robust inventories of the commodity. One Aussie dollar is buying 65 US cents, 93.73 Japanese yen, 51.19 British pence, and 1 New Zealand dollar and 8 cents. Ahead of the local trading session here in Australia for this Wednesday, the SPI futures are expecting the ASX to open the midweek session down just 0.07%. And now let's dive into some trading ideas for your consideration today. Bell Potter has reduced the price target on SmartPay from $2.10 to $1.97 and maintain a buy rating on the payment solutions provider on the back of competitor Block releasing a quarterly update shining light on the payment space. Bell Potter has adjusted forecasts across FY24 to FY26 on the grounds of material reductions to the company's Australian transaction segment revenues on the assumption of slowing average revenue per unit, reflecting an overall slowdown in consumer spending. And softer EBITDA is expected for FY24 before Bell Potter's assumed margin expansion kicks in. Bell Potter remains positive though on SmartPay, however has slightly reduced the price target on these grounds. And Trading Central has identified a bullish signal on Pilbara Minerals following the formation of a pattern over a period of 57 days, which is roughly the same amount of time the share price may rise from the close of $5.32 to the range of $5.95 to $6.10, according to standard principles of technical analysis. And that's all we have time for this Wednesday. Have a wonderful day and, as always, happy investing.